All right, let's get into it. We're talking about a story that's all about some seriously big numbers, high-stakes promises, and what amounts to a multi-trillion rand bet on the future of an entire economy.
First, just take a look at this number, 889.8 billion rand. Let that sink in for a second. This isn't just a figure on a slide, it's a huge declaration of intent. So, what in the world does it actually represent?
Well, that massive number? That's the headline figure from the 6th South Africa Investment Conference. It's the highest total ever pledged since this whole initiative began. And it's a mix of direct capital projects, ecosystem funding, and support from international partners.
But look, a number that big can feel, well, a little abstract, right? So the real question is who's actually ponying up the cash? Let's break down where these commitments are actually coming from.
And here is where the rubber really meets the road. You've got major industry players making some serious moves. Sasol is leading the pack, dropping a massive 60 billion rand to upgrade its plants. Then you have Mulilo, putting nearly 15 billion into renewable energy, and the automotive giant Toyota pledging over 10 billion for its own energy transition. These aren't just vague promises. These are tangible investments from huge, established corporations.
And wow, this chart really drives the point home, doesn't it? Just look at that bar for Sasol towering over the others. A handful of these anchor commitments account for a massive chunk of the total. So this isn't just scattered investment. It's a huge vote of confidence from a few key parts of the economy.
But it's not just concentrated in those big players either. We're talking about 81 separate pledges coming in from 22 different countries. And you can see here, the investment is spread out across a whole bunch of sectors, everything from cars to data centers and from shipping to farming. It suggests a pretty broad-based interest in the South African economy, not just a bet on one single industry.
Okay, so the official story from the government is pretty straightforward. These conferences are a huge success. But how are they actually measuring that? Well, they argue it's all about turning these big pledges into real, tangible progress. Let's take a look at their case.
This number right here, 161. This is a key piece of their evidence. Out of 300 projects announced since these conferences started back in 2018, the government says 161 of them are either totally done or are under construction right now. They're pointing to this as hard proof that pledges are turning into action.
And, of course, there's the human side of all this. We're talking about over 200,000 permanent jobs. I mean, for a country battling high unemployment, a number like that isn't just a statistic. It's really the whole point of the exercise.
But, whenever you're dealing with numbers this massive, there's almost always another side to the story. And not everyone is buying the official narrative. In fact, a pretty healthy dose of skepticism has popped up.
Which brings us to the big question the critics are asking. Pledges are great, but is any of this actually moving the needle for the economy as a whole? Is it creating real, sustainable growth? This visual right here, it lays out the whole debate perfectly. On one side, you have the claim of record investment pledges, but on the other, critics point to a different reality. They look at official data on something called gross fixed capital formation, which is basically a measure of total investment in the economy. And they see that it's actually gone down by over 15% since 2018. Even more striking, real investment per person, that's fallen by more than 26%. That creates a huge disconnect. And yeah, some economists are not mincing words. Azar Jamini, for instance, calls the whole thing a rah-rah effort. His point is, if this initiative were really so transformative, we'd see it in the country's overall GDP growth. And according to him, that evidence just isn't there. And then there's another pretty big wrinkle that critics bring up, this idea of double counting. The concern is that some of these so-called new pledges might actually be investments that companies had already announced months or even years ago, and they're just being re-announced at the conference to pump up the numbers.
So, when you put it all together, what you've got is this real structural tension. It's this gap between the huge, optimistic promises made at a conference and the much more complex, often challenging reality of actually deploying that capital on the ground. So let's take a closer look. Where is all this money actually coming from? Well, the breakdown is pretty revealing. A big chunk is domestic. That's South African companies investing in their own backyard, which is a great sign. But a lot of it also comes from development finance institutions. And that shows that while private investment is there, there's still a heavy reliance on these big international banks to help get major projects off the ground.
Now, you might think with all this criticism, the government might pull back a bit. But nope, they're not just continuing, they're doubling down.
They've launched what they're calling a second investment cycle, and they've set an even more staggering target, attracting 3 trillion rand by the year 2030.
And that really leaves us right here with the most important question of all. The appetite to invest in South Africa, it seems to be there. The numbers prove that. But will that appetite really translate into actual activity on the ground at the kind of speed and scale these incredible pledges suggest? Honestly, that is the trillion rand question, and the answer will shape South Africa's economic story for years to come.